The only tenant they have for these data centers is OpenAI. I don't think OpenAI exists in 2.5 years. For OpenAI to be able to afford its $300 billion 5-year agreement with Oracle, they will have to be, by the final year, spending more than the entire revenue of Microsoft Azure in 1 year. Data centers going unbuilt, debt deals underwater, banks losing hundreds of millions of dollars on data centers. That's your stripper with five houses from The Big Short. That is your bubble. That is something tangible that people can look at and go, "Oh crap, this isn't real."
On the Tech Report with me today is writer of Where's Your Ed At and the host of the Better Offline podcast, Zitron. Thanks for coming on.
Thank you for having me.
When we first spoke on the Tech Report a few weeks back, we talked about Blue Owl Capital pulling out of a $10 billion funding deal with Oracle for one of its data centers. Since then, I think in the last month or so, the S&P Global has changed Oracle's credit outlook to negative. Do you think that this is kind of the first sign of investors getting sort of over the hype phase that we were seeing and finally doing the maths on what's actually happening?
It's the advent of mathematics, I think. I think people are finally sitting down and going, "Can Oracle afford this?" Because Oracle is a software business in decline. In the last few years, they regularly miss analyst estimates. Their licensing division, they had to change their not accounting method, the way they reported revenue multiple times since 2019. Either way, the Blue Owl deal in Michigan specifically is one that's really messed up right now because Blue Owl used to be the only company that really did they did Stargate Abilene, New Mexico. They weren't part of Shackleford or Wisconsin, but they've been in tons of other data center deals. Oracle right now is discussing this deal with Blackstone, maybe, but I don't know. There was a Business Insider story and actually a TD Cowen analyst report that said this as well, that Oracle is just having trouble getting credit from US banks. And this is probably because the banks are starting to say, are these projects taking years and years and years to build? Are they also not making any money when you build them? Can you pay this money back? Questions that, I don't know, I would have asked at the beginning rather than three-quarters of the way through it. But yeah, they're finally realizing that you can't just throw money at this because it takes so long to build a data center, and that's before you get to the rotten economics of AI itself. I don't we still to this day don't know how much a GPU actually makes. We don't know how much they cost. People are still masking these costs, and you tend to only see that when something is unprofitable.
I mean, Alice were calling sort of the Blue Owl exit of like late last year that I mentioned the end of the blank check era is kind of what they were saying.
Yeah.
I assume you agree with that, right?
I do, and I think that the interesting note. So Jerome Darling over at TD Cowen put out this data center channel checks thing, and one note they made was that the only people that are looking to really invest in these things anymore, you're still getting some U.S. banks, but with Oracle specifically, the only ones they can still raise from are Asian banks actually, but SMBC, Sumitomo, and MUFG, so Mitsubishi something. I forgive me for not knowing off the top of my head, but and even they are charging a price premium on the loans. If that's happening, because SMBC, MUFG, BNP Paribas, Societe Generale, Morgan Stanley, JP Morgan, all the same banks float around these deals. So when you start seeing any of them get cold feet, that's going to have, industry-wide implications because right now we still don't have the proof point of any of these data centers. Stargate Abilene, that giant 1.2 gigawatt monstrosity being built out in Texas, has been on the books, think, since June 2024 was when they broke ground. Meant to be done by the middle of, I think it was middle of 2025 it's meant to be done, then the end of 2025, then the beginning of 2026, then the middle of 2026. Now, here's just a little problem with that. You got 8 buildings. Each building has 50,000 B200 GPUs in GB200 racks. Either way, you've got 450,000 of them. As of mid-December, co-CEO Oracle Clay Magoriak said that they had delivered 96,000 of them out of 450,000. And delivered does not mean installed, it does not mean turned on, does not mean in use. How the hell is this thing, which has 2 buildings out of 8 built, with the GPUs just delivered, How are we meant to have that by the end of 2026? The answer is we're not. And I think probably investors in these days, well, banks and such, are looking at that and saying, oh crap, can Oracle not build this? And if Oracle can't build this, Oracle can't charge OpenAI for this. And then we won't get paid on our loans. That doesn't sound good. And what's crazy is you could have known this before you built the data centers because OpenAI apparently lost $9 billion in 2025. I think it's probably far more than that. They are apparently going to lose $115 billion by 2029. Again, think it's going to be more. I think people are just finally working out that these companies that only lose money will not have the money to pay for the data centers. It's insane to me that it's taken this long because this really is quite simple maths. It sounds very high concept, oh, data centers, power, GPUs, oh, AI, all of this mysticism. But when you get down to the basics, it really is just can they afford how much money they have? Not enough money, pay debt? Ooh. And it's frustrating because I didn't do well at maths in school. But I did well enough to know that you need more money than you need than your debts. You need more than that. And I'm not even being jealous here. It's just this is the actual truth of it.
I definitely want to get into sort of the delays of some of the data centers that you hinted at there. But just quickly, you were also talking about that no banks are really happy to be putting much more money in at the moment. But despite all of that, we have seen reports of SoftBank looking to put in, I think it was another another 30 billion into OpenAI. I mean, you kind of covered why they might be the only really big investors willing to put money to Sam Altman, but I mean, why do you think them specifically are the only ones willing to do it now?
Well, so a few things. One, SoftBank cannot afford that. Just money wise, they don't have it. They had to sell all their Nvidia stock plus take out a $15 billion margin loan on their ARM stock just to be able to fund the 22.5 billion that OpenAI was owed by the end of last year. For them to do $30 billion, I don't actually know if they have the assets to do it. And if they do, they would be selling off Alibaba stock. They'd be selling off, if they have any ARM stock left. SoftBank is at the end of its line. But the reason they're investing is because Masayoshi Son is a really bad investor. He's really bad at it. He has had a few bangers, but he is other. It's like if Rednecks made 100 albums. And it's so strange watching them do this because now Amazon is claiming the rumor is Amazon's putting $50 billion in. Nvidia may put as much as $30 billion in. I am getting this weird feeling like none of this money's real, but even if it were, what you're seeing here is the end of the venture capital part of OpenAI. Venture capitalists cannot afford to put this much money in. VCs can cut, I think the largest checks they do is like 5 billion, and that would be like most of their like a third of their fund in some case. I mean, Andreessen Horowitz just raised a $15 billion fund, so to give you some scale. So we are at the end of the valuation as well. Like they're now rumored to be going public at the end of 2026. We'll see if that happens. But for that to happen, that means that these last rounds are the last private money in. They're the last really reasonable time to do that. So the valuations are sky high. The expectation at this valuation would be that it goes public for 1.5, $2.5 trillion. It'd be insane. That's in the range of Meta and Microsoft. Having a laugh about that. But regardless, the reason that you're seeing SoftBank, Amazon, Microsoft, Nvidia is this is now too expensive for venture capital. They need more money than VC has got. Even Anthropic's flopping around claiming they're going to raise $20 billion from sovereign wealth funds out in Singapore. It's very strange. It's all very strange because even since we planned this call, it has gone from okay, OpenAI is raising 30 billion from SoftBank to Amazon's putting 20 billion. Now it's 50 billion. And Nvidia might put 30 billion. Microsoft might put $9 billion. And then wait, a week ago it was saying that the sovereign wealth funds in the Middle East would put money in. That story's gone away now. What happened there? Did they, I don't know, ask for information rights? Did they, and when I say information rights, I mean things like how much money are you making? How much money are you spending? I have a source who told me that nobody knows anything about OpenAI's information since the $100 billion or so valuation. That was years ago. Anyone, now I haven't substantiated this rumor, but it was a trusted source who told me this. I wouldn't be surprised if OpenAI is just going around saying, yep, we need this money, and no, you can't know anything else. But even if they aren't, The amount of money they're asking for has reached a point where traditional funding sources cannot keep up. They can't raise debt because they're too lossy, and the only people who are bundling in are the companies that hope to make money. Amazon has a $38 billion 7-year deal with OpenAI. They give them $50 billion, they get handed it back. It's like eating cardboard. It's ridiculous. And the markets are dumping Microsoft now because they added $250 billion of remaining performance obligations. They give $9 billion to OpenAI. Well, they get handed it back. It's not real business at this point. It's just handing the same few dollars around and hoping that nobody notices, except everybody started to notice.
I was going to ask if you think, I mean, specifically with SoftBank, that it's a bit of that kind of that sunk cost fallacy of you've already spent a bunch of money, so I
Mhm.
spend more to try and win it back, kind of thing.
Yes, WeWork style.
Yeah, what you seem to be hinting at is more of like it is that maybe not in the terms of SoftBank, but certainly with Amazon, with Nvidia, it's kind of well they're going to be buying. It's that circular economy thing. It's like well you're buying from me, and I need to make sure that you're afloat to buy from me.
Yes, but what's funny with Nvidia is, I don't know if you remember, I'm old enough to remember 3 or 4 months ago when Nvidia said they'd be investing $100 billion in OpenAI. Never happened. Just didn't happen. They said in there, but then when you looked in their November earnings, it said it was a letter of intent with an option to invest. Never happening, which is why I don't believe they're going to do it this time. It took Nvidia, I think, a solid quarter to put $5 billion into Intel. It will take them several more because Nvidia's cash position is quite healthy. It's things like 50, $60 billion cash on hand. $30 billion is a lot. I think Amazon has 80 to 100 billion on hand. $50 billion is a lot. SoftBank doesn't have a pot to piss in at the moment. I don't know how they will get $30 billion to them. And OpenAI needs it now. And I think what it is it is the circular financing to an extent. It definitely is with Amazon and Microsoft. Investors with a brain should dump that based on that. Like, I think it's disgusting. I actually think that that stuff should not be legal. You can't just invest in a customer so they can hand the money back to you. That's not real. I guess you could claim, "Oh, you get the boost on the stock," but it's like, will you? Either way, Nvidia is the peculiar one because given it all that, they talk a lot. They say that remember they were go I'm old enough to remember back in November 2025, mere months ago, when they said they were gonna invest $10 billion in Anthropic. That never happened. We've heard Anthropic's raising $20 billion now, not from Nvidia. There's just what's confusing me right now is why nobody seems to have even short-term memory. Because if you actually look at all the announcements of when people are going to be raising money, OpenAI's been saying they'd raise 30 billion, 40 billion, 50 billion, 100 billion, 80 billion, 50 billion, 60 billion. Anthropic, 5 billion, 10 billion, 15 billion, 20 billion, 25 billion, 20 billion. It's just they are very clearly leaking stuff to the press with the intent of making it seem like they're raising more money than they are. And this is the stuff you do when you're, if not on the ropes, you're at least worried about the future. And also, how much money is left? These companies are horribly unprofitable. How much money is left to actually keep doing this? How? To what end? What is the point? What are we doing here? Why are we doing it? It's all just so confusing and boring at this point. Just do something with technology. Stop doing this financial judo.
Yeah, we have been seeing a pattern of sort of these deals being announced and then there not being that follow through that obviously you'd expect from a deal being announced. And then in the last sort of week or so, I've been doing some research. And I found that there's a similar trend happening with data centers, whereby they're being announced and then there's not really the follow through on them being built. And one statistic stood out to me, which was in the last 6 weeks, sort of the midpoint of December until about a week ago, that 41 data centers have been cancelled, shelved, delayed, different terms and slightly different circumstances. But explanations have ranged from local opposition, which is fairly self-explanatory, and then power grid limit issues, which again fairly self-explanatory. But one that really sticks out is that some investors have been citing unfavorable economics, which is exactly the same phrase that Blue Owl used when they exited their deal with Oracle that again we first spoke about. I mean, what do you think the term unfavorable economics is it is really meaning? Because it is somewhat self-explanatory, but it also doesn't feel like it is wholly true about what the situation really is.
So remember that data centers, these GPU data centers, they are likely unprofitable. But even if they were profitable, they'd be years and years in because of the amount of debt you have to take out, which means that if debt conditions worsen even a little, if we go from 2.5 to 3.5% above the base rate, you're now looking at any possible margin you might have going in the toilet. I'll give you an example. So Oracle's $38 billion data center package, the debt package there, it's a 4-year long loan, which is insane, by the way. 4 years for, oh, I think it's 2 separate data centers, one 1.4, one 1.2, I think. One of which is, I think the one in Texas only just broke ground in December. Takes about 2.5 years per gigawatt. So, great stuff there. This loan specifically, though, I found out yesterday, was actually it is interest-only payments until construction is complete. Now, the other problem they have is the only tenant they have for these data centers is OpenAI. I don't think OpenAI exists in 2.5 years. I think they will run out of money and be absorbed into Microsoft. Nevertheless, so you've got these loans that they've got for Oracle has got for these two data centers. So you've got, say it takes 2.5 years. That's being reasonable. 2.5 years of just interest only payments. So you're barely scraping along. Then you start paying for it. And then you're just getting this dribble of revenue from this non existent company that will be dead. How do you even make those economics work? If that loan got even a little bit worse, it would be unpayable because the revenue would not catch up because of the economics of the company. All of these data center loans are threadbare. They're very much like if this gets even slightly worse, we're screwed. And so I'm kind of muddying the point, which is the conditions of getting money for data centers were already pretty rough. You were already buying a lot of quickly depreciating assets, these GPUs. You're already doing a lot of lossy construction. And then if you make it slightly harder to get those loans, you make the conditions slightly worse, it doesn't become economically viable to even finish construction. That's the other thing. I don't think people realize how tough building stuff is, how tough cooling these GPUs are. And remember, these things are on a yearly cycle of upgrades. So what, 2 years in, you're gonna have at least 1, if not 2 generations of new GPUs that have just been announced, some of which won't be compatible with that rack that you just put in that massive data center. Other problem is, came out the information end of last year that Oracle's GPUs, those Blackwell GPUs, negative 100% gross margins. Now, how are you meant to pay back the loan if the margins are that bad? And the reason the margins are that bad is because of the debt you have to take on, because they're so expensive to buy, so expensive to build around, so expensive to cool. That's the thing. The economics were already bad. You make them worse. I get the sense that a lot of these projects were also kind of chancers who were like, they were saying, oh, yeah, we're going to do this deal. Let's get it signed before we've secured the debt or we've got some of the debt. And actually, my big thing that I'm looking into, it's kind of hard to prove right now is, are these debt deals sufficient? Because I grew up in West London, land of great dodgy builders. Spent a lot of time seeing a lot of dodgy building projects around my parts. Yeah. I have never seen a construction project come in under budget. Not once in my life. Not once have I seen someone build something and they're like, "Well, we got some money left over," or "We're exactly where we expected." It always goes over. And that's for like normal things, like local housing and such, or like apartment buildings and such. These are data centers. These are data centers being built in Texas. So massive weather issues you run into there, uh, issues with the ground as well, local communities. These things increase costs, labor costs right now. I think they are power transformers, the steel behind those power transformers, massively, massively short there. The cost of RAM is going up across the board because everyone's building data centers. The cost of storage is going up across the board because everyone's building data centers. These are raising the costs for loans that closed last year. Stargate Abilene, I think they only raised $15 billion for that with Blue Owl, JP Morgan, Crusoe, and all them. How the hell are they going to deal with any kind of construction delays slash cost increases? No one seems to have this answer. And I think what we're really seeing with all of this is you're having to, and I say this with no offense to either of us because I'm in this camp too, you're having to watch business journalists learn about finance and construction and power. And these are all brand new things. Because last year, you could just say, oh, they're building a gigawatt. They'll get it done. The concept of a gigawatt data center is very new. Like it's not like they build one building that's a gigawatt. They build several buildings that they interlink with fast networking, and that's a gigawatt. I think that people are finally realizing that building things is hard and powering them is harder.
I just want to go back to that point you made about OpenAI 2.5 years. Ju- why? Why specifically 2.5 years is your estimate?
Oh, I think it could be sooner. I'm just saying they won't exist in 2.5 years.
Fair enough.
They are claiming they're going to burn $115 billion by 2029. I also think that they are lying. I can't prove it, and it's just a gut instinct. But I don't think that OpenAI is being honest about their costs because, to be clear, that story, the 115 billion, was leaked to the information. OpenAI has made no statements about its costs, so they are not lying technically. But look at it more as a numerical thing. OpenAI last year raised $41 billion. They received 22.5 billion of that by the end of 2025. Information story in June of 2025 last year said that OpenAI would raise that 40 billion and only need to raise 17 billion in 2027. A mere 7 months later, they need to raise another 100 billion. Do you think that this is OpenAI being frugal? Do you think that it really is a question of, do you think this is a company saying we're going to be smart, we're going to have the money left over so that we can go through to IPO and be fine? No, this is a company that's burning way more. It's the same deal with Anthropic. Anthropic went from allegedly only losing $2.8 billion in 2025 to the information reported about a couple weeks ago. They they made 4.5 billion in revenue and lost 5.2 billion dollars after that. These companies are the same. They are just at different stages of the, I don't know, what can I say legally speaking, of the process of extracting capital from people without being fully upfront with the consequences of doing so. Because both of them burn billions of dollars at indeterminate rates. The revenues they make are questionable. OpenAI is saying they had $20 billion in annualized revenue. That means 1.67 billion in a month. I just I feel like there's a lot of key jingling happening. But when you actually look at the real economics, things do not look good at all. And people need to realize that this is the case because let's say that I'm correct with OpenAI and they die in, let's say, 2 years. Oracle will possibly die too. Oracle cannot afford to exist. Oracle has taken on $56 billion worth of debt, $248 billion of upcoming lease obligations, and their only tenant for them is a company that burns what's at least $9 billion in 2025. Like, how do they pay the debt? Oracle doesn't have the money. Their revenues are none of the numbers make sense.
I mean, I suppose the idea is maybe the reason behind some of the circular or the explanation behind some of this circular investment is if we keep them afloat until they can buy from us, then maybe that'll work. But I'm getting the impression you don't quite believe in that.
It would require for, and this is not me being sarcastic or hyperbolic, for OpenAI to be able to afford its $300 billion 5-year agreement with Oracle, they will have to be, by the final year, spending more than the entire revenue of Microsoft Azure in 1 year. Microsoft Azure's 2024 revenue, I believe, was $75 billion. The final year of OpenAI's contract with Oracle will be $90 to $100 billion. One company, one. So that will mean that they likely need revenues of over 200 billion, which would put them in the same annual revenue as Meta. It's just, this is, again, not hyperbole. This is the normal maths. People frame this as crackpot analysis. They frame this as alarmism. This is just the numbers that everyone's talking about. This is the thing happening. And I think that the markets are kind of working that out very slowly. Way too late too.
I mean, to your point, it seems that your prediction of the other week were bang on, as a major report from I think it was Uptime Institute released this Thursday predicted, like you said, as much as 50% of all of the announced mega data centers. So, like the big ones, not just sort of the mid and smaller level ones, were just never going to be built. I mean, if that becomes true, what would that mean for the AI industry, and I suppose by extension for the rest of us as well?
Really comes down to which ones get cancelled, because I actually think 50% is kind of, I think that's them being optimistic, because the amount of money that's going to have to exist to push these things through is more than they've raised. 178.5 billion 2025 just in the US alone. But on top of that, I think that even if half of these get built, the debt deals get unpaid there. And I think that the consequences will be that the AI industry will have to prove itself harder as these things stop being built. They will have to provide more proof of revenue potential, more proof of actual efficacy at stuff at a time when they're kind of struggling to do so on both counts, where even Salesforce is saying, wow, we made 100 and something million annualized revenue. So like 10 something, but it's a month, like a piddly amount of cash. This is the thing. These companies are consistently failing to prove that this is a real deal thing. If we have half of these data center projects just never happen, that is a far more tangible bit of proof that the AI industry isn't for real. I think that because this whole thing is vibes based anyway, I think that it's hard for anyone to tangibly right now prove that AI is here, which is why you're seeing so much vague stuff about Claude Code and the like. Everyone's saying so amazing. When you ask them to tell you why, they go, "I built a website." But data centers going unbuilt, debt deals underwater, banks losing hundreds of millions of dollars on data centers. That's your stripper with five houses from The Big Short. That is your bubble. That is something tangible that people can look at and go, "Oh, crap. This isn't real." That is the kind of thing that causes people to dump stocks. That's what causes, and think about it. You see a report like this and you're a banker and you're looking at data center deal. Do you wanna sign it? Are you really thinking that this is a good idea? Other than Blackstone seems to love this crap. Blackstone's gonna be the last man standing on this one, I think, other than SoftBank. I think SoftBank is gonna keep doing weird stuff until the end.
Just touching briefly again on the data center stuff, the lead-in time from doing some research for even getting connected to the grid, because obviously, as I mentioned before, there's issues of supply, let alone connection and
Mhm.
local opposition, all these things. The lead-in time is 8 years for some
Yeah.
data centers being connected to the grid. So, I mean, when you take that into account, I mean, how will you be getting yeah, you line up 8 years lead in time before your data center can be turned on versus the payback time for the debts, and you're kind of left with a pretty stark picture.
Yeah, I mean, it's pretty bloody simple, Isaac. You got 8 years to turn on a data center, which you have to pay off completely in 6 years. How'd you pay it off? I mean, Stargate Abilene, in my research a few months ago, they only just got 200 megawatts of the 1.4 gigawatts they're gonna need. I mean, how'd you if you can't turn it on, you can't get the money. And this is the other thing that people don't realize. Lots of people will say, well, the data centers are going to get power because the power was created, because the power was built. No, because it's not just the question of the power existing, it's the ability to get it physically to the data center. And depending on the kind of power, that is months to years worth of work, interchanges being built, communities being ripped apart. It's why we're seeing this opposition in Michigan to Stargate, Michigan, which is the Saline County is just saying, hey, you're going to rip apart our community to do this. The other thing is even when you get it there, you still have months of power testing to do because here's the thing with power. If you do it wrong, people die. Things blow up. Like, it's not even a case of, "Oh, if you do it wrong, it won't be as efficient." That's also true. If you do it wrong, people can die, and they'll die really horribly. And when they die, something will blow up, which will set things back months. There are even in relatively regulation light places like Texas, there are real deal processes you have to go through. They're having to build a gas power plant in Stargate Abilene, and it's like they people talk about that so flippantly. That's gonna take I mean, they were planning it the middle of last year. I doubt it'll be done by the end of 2026. Even if it does, it's like a quarter of the power they're going to need. Nobody wants to talk about the grisly aspect here, which is even if the money exists, which it doesn't really, even if the construction is finished, which it won't be, even if the power is existing, which it won't be, will the power reach it? And it probably won't. And even if it does, you've got Oracle saying they'll build 10 gigawatts of data center capacity for OpenAI by 2030. Now, TD Cohen, Jerome Darling is talking about this. It was $30 million of fit in, so all of the stuff on the inside, chips, networking, storage, and all that, and 12 million plus per megawatt. So Oracle, I worked out yesterday, it was like they need $150 billion more just to do the stuff they've kind of already done, 250 something plus. The economics don't make sense. They never have. They never made sense. I know I'm repeating myself, and I have been for years now, but it's really annoying because people want to frame this as some historic power build out and some historic infrastructural effort. Historic infrastructural efforts are done carefully, and they're done in ways that have a real goal and a real outcome. This isn't building a bunch of power to build the future of housing. This isn't building a bunch of power to build new cities. This is building a bunch of power to build data centers that are not job creators. Even the jobs that exist for data centers are not for locals. They exist for highly paid, highly specialized talent that is in short supply to be flown in. All of those data centers being built in Washington state, none of that's local talent. They're being flown in at quite a high premium to build them. These are not job creators. They're all getting tax abatements. In California, they make a good amount of tax off of data centers, but again, to what end? And what happens when these data centers don't have people paying their debts? What happens then? It's all just deeply unfortunate because at the end of this, I think we're going to have more space for laser tag than we'll have actual economic value.
Well, on that note, Zitron, thank you for taking the time today.
My pleasure.